Hello, chart watchers and Decision Point faithful. Welcome to this Monday, September 21st episode of Decision Point. I am Erin Swenlin, and I am here with my father, Carl Swenlin, and it's our job on Mondays to prepare you for the week ahead and show you the charts we think are important. And I think there's a lot going on today. How's everything going for you, Dad?
A pretty exciting day, pretty wild market.
It absolutely is. So I know we're probably getting a lot of people tuned in because they're all going to be wondering what the heck to do. Of course, I don't know that we have all the answers, but we certainly can help with guidance, I suppose.
Yes.
All right, so we're going to start off with a market review, and I'll talk a little bit about hammers. We have some really interesting climactic indicators that have pushed their limits. So they've had these climaxes. The question is when we get them, what are they? Are they initiations or exhaustions? So we'll talk a little bit more about that when we get there. Carl is going to talk about the velocity of money. You wrote an article about this. Was this part of our Decision Point alert, or was that part of
That was a free article.
That was a free article. So everybody out there who are not members, you'll want to go to check out the Decision Point blog that resides on StockCharts.com. So you'll find our free blog over there, the Decision Point blog. Just click on the articles and you will have Carl's article about the velocity of money, but he's going to talk about that today. And we'll have to look at gold and gold miners. You know, I had my free trading room this morning and there were a lot of questions that were coming in about gold and gold miners in general. Everybody always wants to know what's going on with those. And so we definitely will cover that. And then I do want to remind you, as I'm talking about it, that we do have a free trading room on Mondays at 9 a.m. Pacific, noon Eastern. And I get in there, I give you a quick market overview, what's going on. I look at what current upgrades are, most actives, and then we go through and I answer your questions as we go. And I also will look at your symbol requests. So if you're interested in doing the free trading room, you can find the links either in the free Decision Point articles, or just sign up for our email list, our free email list. Just go to decisionpoint.com and sign up right there for the free list. And you'll get the links to register for those free trading rooms on Mondays. And as a reminder, our Decision Point Diamond subscribers do have a trading room on Fridays. It's only for Diamond subscribers. It's really a great time. We really enjoy it. We go over that week's diamonds in the rough. From what we had seen, what we were expecting. We discuss why they didn't go the way they should have or why they went the way they should have. And so it's a really enriching experience for all of us involved. So that is on Fridays, but that is only for Decision Point Diamonds members. And speaking of diamonds, at the end of the show, I'm going to re-look at the ChartWatchers Diamond of the week from Friday. And then I'll also give you a diamond of the week that I presented last week for my subscribers, but has actually really started to break out. And I think it's still a good place that you might want to consider as a diamond in the rough. All right, I talked enough about the free trading room, so we'll skip that. All right, currently our DP signals, what are we seeing? Of course, short term, very weak. The short-term trend model, this measures if the 5-day EMA is above or below the 20-day EMA. And currently all of the 5-day EMAs are below the 20s for all of these 4 scoreboard indexes. It's a neutral because that crossover, that downside crossover occurs above the 50-day EMA. So it's a neutral, not a sell. But of course, the PMO, which is only a buy or a sell signal, those are all on sell signals. I think that's common knowledge at this point. Momentum has been sliding, so not a surprise to see those PMO sell signals. Currently, there are no changes to the Decision Point scoreboard so far, but as my dad and I talked before the program, that utilities one is getting ready to go away. So that buy signal, we could be losing that one soon. We'll have to take a look at that chart real quick as well. So let's go look at some of these charts. Well, I think it's best to start off with what's going on in the overall market. Actually, I'm going to start us off with this particular chart right here, the 5-day the 5-month candle chart for the SPY. And there you see that hammer. These are candlestick patterns in general, and I talked about this during the trading room. They're really one-day indicators. They don't always mark the beginning of a long-term, rising trend or declining trend. They're really a one-day signal. So I do find these hammers coming in at a low like this. They do have bullish implications. Now, whether that's going to follow through or not is the big question, though, isn't it?
Right.
And we have, let me look at the NASDAQ really quickly for everybody as well. We lost this area on Friday, right at those tops, and now we're heading back down to what could be the next level right about here, below 10,500. So that's like 10,250 for the NASDAQ 100. So not a good look. To me, when I look at it, the first thing I think of is, yes, we're going to have to come down and test that support level, especially after losing that 50-day EMA.
You've got a head and shoulders
When you start looking at these as candlesticks.
You've got a head and shoulders there.
Yes, absolutely. And in this case, with the NASDAQ, we don't really have a hammer, do we? So, we might be looking at some good signs on the SPY and some of the other indexes with those hammers, but NASDAQ 100, at least, we're not seeing that.
You don't want to draw that neckline?
Oh, sure. I can do it this way. Right there.
Right. So it's up and diagonal. So today, actually, it broke down last week, I guess. And today, even though it's snapped back, it's not back above the
that neckline.
So.
And again, it lines up very nicely right here, doesn't it, with those tops back in July. And so we've lost that level. And, like I said, the SPY may have that hammer on it, but.
I hate head and shoulders because they so often fake you out.
Oh, I know, right?
This one's going to.
Yeah, and it's funny because, that's one of those patterns everybody knows about, but you're right. I mean, I know that there are a lot of fake outs, and gosh, I'm trying to think of the stock I looked at earlier today, but it had a head and shoulders going on, but it was rebounding, right? And so I talked about how I like to draw this declining tops trend line when I'm looking at a head and shoulders. And if I get a pretty good, solid, decisive breakout from that, then I usually just, hey, the pattern broke. It's just not the pattern I want. So that's one of the ways I kind of check to see if we're doing what we need to. But we don't really have quite a head and shoulders here on the SPY.
Yeah, you could make it out, but it's a little skinny on the left shoulder.
Well, let's go ahead and look at the climactic indicators, and I'm going to hand it to you to talk about these. Do you want to use your own chart, or you can use this one?
Yeah, I'll take it. I've got to find the. Oh, there it is. Okay. That's not the one I was going to start with. Let's see. There's that. One of the things to mention on this chart is its volume. Notice on Friday there was very high volume, but that has to do with options expiration, quadruple witching options expiration. So it really doesn't give you you can't say, oh, that's a blowout down move on Friday. As it turned out, it wasn't a blowout. So that's something to know. But here today, we still got a lot of volume. Let's see, I'll get to the proper chart here. We got net advanced declines, net advanced decline volume, both climactic. At this level, new highs and new lows are out of the play, so we don't need to watch those. But then we do have, I would consider climactic upside or total volume on S&P 500. Now, I complained about it in the weekly wrap that you can't always tell what you've got here in the way of climaxes. How do we define them? On this day, this was on a Monday. I'm sorry, that was a Monday, and that was upside exhaustion climax as it turned out. And then it was followed by, on Friday, it was, we didn't know, because Friday, the price didn't really break down, and the volume was fuzzy. You weren't going to get much from that volume. But today, could classify it as a downside exhaustion climax.
I would have said the exact same thing.
There you go. Where did you go up? Okay. So yeah, there's we'll have to see what happens tomorrow, but it looks to me like with this hammer, we're going to get a bounce.
Yeah. Now these climactic moves, just like to me candlesticks, they're not necessarily, the harbinger of, we're going to get this great bull market rally now. These indicators are so very short term. I mean, that's why we call them our climactic indicators. They really give you a feel for the next day or two, maybe three. So like the hammer, that's giving us a clue for tomorrow, but it really doesn't necessarily tell you there's going to be follow on. So that's
Right.
kind of how I look at this, a selling exhaustion. However, it doesn't mean that it's, the bottom of all bottoms and we're going to end up back at all-time highs.
Well, I got it here. Here's the head and shoulders pattern on the technology sector. And today, there's the neckline, and today it broke down through it, but it recovered. So far, it's still not executed.
Yeah, very strange day today. Technology was the only sector that was up.
Yes, and technologies led the decline.
Exactly.
From the September top. So it's taking a break, but everything else is falling apart.
Yep. I think it was just probably time, but looking at that, I mean, we haven't lost the declining trend. We still have that breakdown. So while it was the only positive sector, it's still, the chart doesn't look really any better than it did before.
We could take a look at utilities. See, this is so nondescript for months here. It's moving sideways and even narrower and narrower range. And so we're going to probably get tomorrow, a crossover up to 2050 EMAs, and that will give us a neutral signal for utilities. But the 50 is not that far above the 200 EMA, so that can cross down. That could cross down here within a week or so. It could, if this continues. But again, with this narrow range, it's not something that alone you would want to act on. It's just you don't know whether this sideways is going to continue.
Sure. I mean, at least you do still have that bullish formation there with the ascending triangle, and it's testing that right now. So I guess we'll know more tomorrow if we get that breakdown. I mean, the chart itself doesn't look great. I mean, the PMO looks pretty ugly. The RSI is gone negative now.
Below its signal line, and that's always a bad sign.
Absolutely.
Should we take a look at gold?
Yes, let's take a look at gold.
Okay, here's the ETF. GLD. I probably ought to change this to. Let's change this to. Okay, it broke down out of the triangle today. I should probably tighten that triangle up a little more because it's well below that. I don't think it's a decisive break yet. I think I'm really more concerned about the horizontal support and it's down below the line drawn across the previous all-time high, and that's not good. And the
No, that drop below the 50-day EMA is a real problem for me too.
right, and let's just tell it. Why did the gold do so poorly today? That would be because the dollar was up.
Yes.
There you go. So it's still, this is an interesting chart. You've got a gap. So this group here is actually still, it's an island. It's getting up towards being at least maybe a small continent, but we still have that potential for a side reversal. What do you call it? An island reversal. This saucer, that's a bullish formation. So you need to keep an eye on that.
Right. Yeah, the gap resistance is going to be what is telling what happens to price when it gets in there, if it will. Looks pretty good though. The chart looks pretty good.
Let me cover this chart while I've got it, and you can
Absolutely.
this is one I picked up in the another newsletter. I got to see this chart, and to me, I make something different out of than what was covered in that particular article, because I noticed it was okay. Let me just say, velocity of money is basically how fast a dollar keeps changing hands in different transactions, and it's if it's too fast, you're headed towards inflation, and if it's too low, you're heading towards deflation because there are fewer transactions taking place. So you had this stability from 1960 to in the early 90s, and you get that fast move there, and then after the 2000 top, it's been zigzagging downward, and of course here's the COVID drop. But this is amazing to me, and as far as we hear about all the inflationary stuff, but this is a totally deflationary issue here, and so I'm still saying don't think just because the Fed is doing what they consider to be magic that we don't have to worry about deflation. I think it's going to come bite us, and I'm not an economist, and I don't know if that disqualifies me or it actually gives me a higher qualification. Anyway, this is an interesting chart, and you could see what I have to say about it in that free article. It's on our site too, by the way. The free articles go on both sites.
Yes, they do. Yeah, our free articles are listed on our blog roll page, so you'll definitely get an opportunity to see those.
Okay.
All right, we have 10 more minutes. We got the velocity of money in. We looked at gold. We did not look at gold miners, so I'm going to go ahead and take the screen, and I would certainly love your take on gold miners as well. Go there it is.
Yes, I think that gold, we're liable to have some more trouble with it before it's all done with, but I'm still bullish long term. But I'm still waiting, and I'm still waiting to get back in because I got out on that original crash that we had fairly recently.
Good job. So gold miners, though, really haven't had that serious breakdown. I mean, obviously, we did come below that 50-day EMA today, but we are still holding that horizontal support level, which has a lot of touches, meaning it should be very strong. So if we lose that and that 3750 level where we get below that May top, then I think we're really in trouble for gold miners. But for now, they're holding up. And, when I look at the indicators down here, I'm seeing them getting, this one especially, starting to hit oversold territory. But, certainly we've seen lower on on a bigger decline, but just seeing the fact that they've held up, especially the price above the 50-day EMA. You know, of course, the 200-day EMA, every one of those components still has their price above their 200. So there's still some internal strength there in the longer term. But I don't know, I'm just seeing the fact that we've had the amount of components in GDX, you know, mainly staying above their 50-day EMA. You know, this is more of an intermediate term indicator. The BPI has turned down and is now below its signal line, but of course we've been really flat when you look at a lot of the indicators that we have. So, you know, I was telling folks in the trading room, because again, they asked about gold and gold miners, and you know, what I reminded them, at least from my experience, and you can tell me if you see the same thing, but while gold miners are somewhat tied to the price of gold, you'll notice that they don't always follow gold exactly. And the main thing is because, you know, they're companies. They're not completely dependent on the price of gold. They have to run a company, and a lot of different things have impact on that. And of course, I think they're more vulnerable to the market wins because they are companies.
Right. You know, Berkshire Hathaway bought a big position in one of the gold miners. I don't recall, but it's the biggest one, I think. And the difference between buying gold and a gold miner is gold miner has cash flow. So if the price of gold keeps going higher, you know, we get up to $2,500 to $3,000 an ounce, that kind of thing. Well, their cost of bringing it out of the ground remains relatively the same, and they start putting a lot of cash into the holder of these companies.
Exactly. So, you know, that's why you will see kind of a dichotomy. But the good thing is that, like you were saying, I mean, if gold starts to go up, that gives the GDX components wind behind their sails, you know, so even if the market isn't doing that great, they can still pull it off, because if gold is going up, that definitely helps their bottom line.
I would characterize it as the marking time, waiting for gold to get its act together.
Yep. So at this point, not much going on here. We really want to hold that support level though on gold miners. It's not a good look. All right, so gold miners was one, and then I've got my diamonds, but oh, I know that we got, not on USO. I wanted to look at the oil chart because we're getting braiding between that 20 and 50. And, you know, when I was looking at the sector scoreboard for the past week, you know, every sector is down for the past week, but the leader, the one that was down the least, was energy. And clearly associated with the move in oil. But now we're starting to get that pullback. Maybe we're looking at cup handle. It's just going to be interesting to see what happens with oil. You know, at this point, it really hadn't been doing a whole lot. Now we're in this is USO. In fact, let me make this just a little bit bigger. Let's make this a little longer term. The reason we blew it up is because obviously with that decline, it's really hard to determine what's going on here. So that's why we've moved to, whoops, like a 6-month chart.
Incidentally, natural gas came alive today.
Oh, let's look at UNG and then I'll cover those diamonds. All right. So a lot of subscribers have been asking about UNG. ChartWatchers, I think it was back here. I know we had a double bottom though, so I'm pretty sure it was back here. Give you all the credit, or the one to text me and say, hey, have you looked at UNG? This is looking really interesting. And I liked it. And I talked to, I wrote a ChartWatchers article about it. And of course, on Monday it dropped. But after that, you know, my diamond readers got that information. And so, you know, most everybody that followed us got in right back here. And so, of course, we had this beautiful ride. We had the pullback. What do? I'm sticking it out personally because the PMO is still rising. I've got a positive RSI. But as soon as we started to see that decline, and we came down here to that support level. That's when I wrote the chart watchers that was basically, hey, it's not looking too good anymore. Had a few people put their heels in and tell me, oh, it's, you know, it's just a pause or whatever. I'm like, whatever you want to do personally, this is what I see. And so fortunately I was able to get out pretty early, and hopefully everybody else got to book some of that profit. But yeah, it's a really interesting chart right now. Definitely came back to life here after bouncing right on that support level, really. You can even see a big gap here, which is, you know, holding up as support as well. So kind of interesting. I don't know if it's enough to get me back in, but certainly.
Yeah, I'm enthusiastic about energy, although it's relatively speaking doing better than the rest of the market, with, you know, from the short-term basis.
Right. And of course, it's probably a lot, like we were saying, associated with the oil. But it's starting to, I mean, I keep waiting, I keep watching this sector because there are so many bargains in this sector, but I refuse to go into it until it looks a little bit more bullish. But I do like seeing that falling wedge. That is a bullish pattern.
You got it.
All right, before we run out of time, let's go ahead and look at some diamonds. AXNX was the diamond of the week for ChartWatchers. Let's see if I can go get the good chart here. All right. So this was the one I had for ChartWatchers. Of course, you know, I was looking at it on that breakout. We did get the pullback, but notice we did close near the top of the range for trading and above this area right here. This marks when I first talked about it in diamonds, that pink line there. And then the drop here, that shows you possible stop areas. So that's what I was looking for there. So I think this one still looks good. You have the V bottom. It's holding this support level. The RSI has turned south, but look at that, PMO still looks good. I still like what's going on down here as well with the OBV. And then finally, our last one is going to be Quest. Where is that? Yes, so this was Tuesday of last week. Didn't do a whole lot last week when I presented it, but obviously a good day now. And what I like is it covered this gap completely, closed near the highs for the day. I think Quest is looking very interesting. The RSI is now positive, and of course the PMO is on that buy signal. I haven't been thrilled with the OBV on this one, but we did get a break from that declining trend. Now, if you look in the thumbnail, we do have rising bottoms, so that's a good sign. I don't like seeing these higher tops to the left. Until then, I know we talk about those reverse divergences. So if we're going to get back up here, I want to make sure that volume will get back up there too on that OBV. But right now, I'm thinking this chart is looking pretty good. And that is the DecisionPoint Show Diamond of the week. And I hope you enjoyed the ChartWatchers Diamond of the week as well. If you want to find those articles that we've been talking about, you can go straight over to our website. So here's the home page if you've never been here. And that's where you want to sign up for our free newsletter so you can hear about the free trading rooms. And here in the blogs and links, you can see these mark the member only ones, but you can come down and you'll also get to see the free articles. The one thing you won't find is my ChartWatchers article, because ChartWatchers doesn't come in over here, which is why I send it off to all of our free readers. All right, that does it for us. Happy trading, and we'll talk to you next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.